Good day. Welcome, everyone. Just checking that we are now live. Correct. Right. So, welcome, everyone, to this World Water Week webinar session focusing on the financial sector and how the WWF Water Risk Filter and its scenarios can help investors to better assess water risk across their portfolio and identify opportunities for building and financing climate and water resilience. I am Erin Laporte-Bisky, and I will be the moderator for this session today. I work at WWF as the Water Risk Filter Project Manager, and on this webinar, I'm pleased to also have present Alexis Morgan, who is WWF's Global Water Stewardship Lead. So a big welcome to everyone, and Alexis Morgan will open the session with an opening statement, and I will follow with a brief introduction to the WWF Water Risk Filter. I am pleased to welcome two speakers from major development financial institutions who will share their experience and insights on the use of the Water Risk Filter tool and scenario analysis. First, you will hear from Jens Honnerhoff, who works as Senior Environmental Specialist for the German Development Bank DG, more specifically the private sector development financing branch of the German KfW group. And you will hear during his presentation that he has played obviously a critical role in the initial development of the water research tool. Now, after Jens's presentation, you will hear from Zinle Chabalala, who works as an ESG Impact Associate at the UK Development Bank CDC Group, with whom we recently started a new partnership with regards to the water risk filter. And Zinle specializes in ESG for private equity funds in Africa and Southeast Asia. And in her role at CDC, she supports private sector development while encouraging effective management of ESG risks and opportunities. So after all our speakers' intervention, we will end our session with a 15-minute Q&A session. Therefore, I encourage you all to post questions in the Pathable chat as they come to your mind, and we will address them at the end. Now, following this overview of our session and welcoming, I'm happy to hand over to Alexis Morgan to open up the session with some opening statements. Thank you. Hand over to Alexis.
Perfect. Thank you. Welcome to everybody. I'm really excited to be joining this call. I'll keep my remarks brief because there's some really great content that we'll be hearing from the various speakers. I suppose I just really wanted to open the session by speaking a little bit to the journey to this point. Despite the fact that we're not physically located in Stockholm, it's certainly been a shorter travel time for all of us this year. The journey to getting to this point with the water risk filter, and even moreover, the work that all of us and many other players are doing on water risk, water opportunity, and the rise and growth of engagement by various FIs, and in particular DFIs, in this space has been quite a long journey, more than 10 years that we've been kind of working on this sort of stuff. And it's been really fantastic to have key partners as we've been going along that journey, not only DEG for a number of years, but now more recently with CDC. And that journey, I think, has tracked a number of different things that you'll be hearing about today. Not only the importance of water risk, but more recently, just this growing rise of importance around climate and water, and how that increasingly is beginning to turn to how these tools and approaches can be used to engage more resilient actions and resilience activities. You'll hear about the importance of context in that whole area, and I think the ongoing presence and interest of various players in the financial space, and we're seeing that not only within the development FIs, but also the various private sector players, has been certainly something that we've been tracking over the last number of years. Not only has there been a growing interest in ESG and water issues, but in particular, I would say that that's happening just because of the materiality of the issue. We're just seeing more of those impacts, and a lot of those do manifest through climate. So you'll hear more about each of these different aspects as we go through, and I'll try to sort of bring together the points that various speakers are bringing up on the call, as well as some of the questions and the answers that the various panelists will be engaging in, and try to summarize some of the key things. So I do encourage people to put those questions into the Pathable chat, and we'll pick those up at the end. So with that, I will hand back over to Ariane to lead us into the various speakers, and I look forward to speaking with everyone at the end.
Excellent, thank you very much. Just to confirm, Alexis, can you confirm you can see my screen correctly?
I can, perfectly.
Great, thank you. So thank you. Thanks, Alexis, for this opening. And now I am pleased to give you a presentation where I'll dive into an introduction of the WWF Water Risk Filter tool, and more specifically, its latest features with regards to scenario risk analysis to better assess future water risk as well as opportunities. So, for a bit of background, over the past years, as I'm sure you've heard, various types of water risk, from scarcity to floods to water pollution events, have grabbed the headlines around the world. And businesses are already feeling the growing pressure and financial impacts as water risk are affecting whether it's their direct operations, the security of their supply chains, as well as reputation and license to operate. And so water risk is a real and existing threat to companies' bottom line, and hence obviously a real concern also to investors. And this is clearly also illustrated with the latest stats from CDP, from companies reporting to CDP, the International Disclosure Organization, which estimated a combined business value at risk of approximately $300 billion due to water risks. And as you've heard, climate change is expected to exacerbate water risks. And actually, based on analysis using the water risk filter, we estimated that almost half of the global GDP could come from areas facing high water risk by 2050. So for companies and investors, water risks are a growing concern, but where there is risk, there is also opportunities. And for those of you wondering, okay, but what can I do and where to get started? Well, a good place to get started is with WWF's flagship tool, the Water Risk Filter, which I'm going to introduce to you now. And the Water Risk Filter is essentially, it's a free, practical online tool designed to be used by investors and companies to assess water risks, whether it's across their operations, supply chain, and investments. Now, the Water Risk Filter tool was initially developed in cooperation with the German Development Bank financial institution, DG, and you will hear shortly about this during the next presentation by Jens. But just as a bit of background on the Water Risk Filter, since its first version actually that was launched in 2012, it has evolved and provided new features over the years. But essentially, it is at its core, it's a tool for corporate and portfolio level screening aimed to enable companies and investors to better prioritize where and on what to focus their actions, engagement, and investments to respond to water risks and build resilience. And thanks to our new partnership, which started earlier this year with the UK Development Bank CDC Group, we will be enhancing the Water Risk Filter tool even further, with the aim to launch towards the end of October this year, an updated version of the tool, which will enable companies and investors to assess water risk across their portfolio under different climate and socioeconomic pathway-based scenarios, which I will now describe in a lot more detail during this presentation as our latest and new feature. So that was with regards to an overview of the tool, but also for those of you who are not so familiar with the Water Risk Filter and its risk assessment framework, I wanted to bring up this slide just to give you a bit of background how the tool is assessing water risk. In essence, it looks at two types of water risk. You've got basin risks, which are water risk due to the nature of the basin in which sites or assets are located. But risk is also depends on how does that site or asset use water and depend on water for its activities, which defines what we refer to as operational water risk. And so since its creation, the Water Risk Filter is the only tool out there to assess both basin and operational water risk, and more specifically, covering all three types of water risk with regards to physical, regulatory, and reputational water risk for a comprehensive assessment. Now, while the tool was initially developed to assess current water risk, it has evolved, as you've heard, to help users understand also future water risk under different potential scenarios. As most of you will be aware, the Task Force on Climate-Related Financial Disclosure, TCFD, which was established in 2015 by the Financial Stability Board to provide a set of recommendations on reporting on climate-related risks and opportunities, with the objective to better improve um, financial markets and to better inform, financial markets and investors. Now, one of the key recommendations from TCFD is to conduct scenario analysis in order to better identify future risks and opportunities, and in turn, appropriately incorporate them within a company's or investors' planning processes and strategic investment decisions. And as climate and water are closely interlinked, it is critical for TCFD scenario analysis to incorporate water in a comprehensive manner. So for this reason, we decided to develop scenarios of water risk based on climate and socioeconomic changes in line with the TCFD recommendations, and to then integrate it into the tool, the water researcher tool, to enable users to assess future water risks, as well as explore opportunities. Now, when developing the water risk filter scenarios, we aimed to apply the same approach as to the tool's current risk assessment framework by integrating 2030 and 2050 quantitative projections covering all types of water risks. And as you can see here illustrated in this diagram, the water risk filter has a comprehensive coverage of water risks, ranging from TCFD focused recommendations on physical risks, which includes both acute physical risks such as flooding, as well as chronic physical risks such as scarcity, water quality, and ecosystem service degradation. But with the water survey, we also cover some of the less commonly explored regulatory and reputational water risks, which can cause significant potential impacts if overlooked, and are also interlinked to physical risks. So really, to conclude, the point is that the water source scenarios are aimed to provide a very comprehensive overview of how different types of water risks may evolve in the medium to long term. And to achieve, obviously, this comprehensive coverage of water risk, we collaborated with multiple research groups, as listed here, with expertise in each of the specific aspects of water risk. So we, WWF, did not develop ourselves any models, but rather we collaborated with these different research groups that are listed here and compiled all these different scientific and peer-reviewed global data sets of different aspects of water risk together, and translate it into the water risk framework and integrate it into the tool. Now, and so in line with the TCFD recommendations, the water risk filter scenarios are based on a combination of most relevant climate scenarios based on IPCC representative concentration pathways and socioeconomic scenarios from the International Institute for Applied Systems Analysis, IASA's shared socioeconomic pathways. And accordingly, we developed 3 pathways of the water source scenarios following the respective narratives, which are summarized in this diagram on the slide, which range from an optimistic scenario, which would represent a world with sustainable socioeconomic development and ambitious and reductions in greenhouse gas emissions, leading to an increase in global mean surface temperatures of approximately 1.5 degrees by the end of the 21st century. Another scenario is the current trend scenario, which represents a world similar to current social and economic development and intermediate emissions, which will lead to an increase in temperatures of 2 degrees. And finally, there's a pessimistic scenario, which will represent a world of unequal and unstable socioeconomic development and high emissions, leading to temperatures increase of approximately 3.5 to 4 degrees by the end of the century. And so really, water risk will evolve in different ways over time under these different scenarios. And currently, the water risk filter only allows users to explore visually different water risk maps to understand how different types of water risk in 2030 and 2050 could potentially look like under different scenarios. However, I'd like to emphasize that thanks to our partnership with the CDC group, we will be updating our web platform and releasing an enhanced version of the tool towards end of October, which will allow users to perform scenario analysis and therefore better prioritize where and on what to focus, whether it's your actions, your investments to mitigate and adapt to water risk and build resilience. And here on this slide, I really provided you a sneak peek actually of what the new scenario analysis feature will be looking like once embedded and integrated into the water risk filter to be able to map and analyze water risk across your portfolio. But you will actually get the opportunity to hear from examples and insights on application of the scenarios in the presentation by Zingle from the CDC group. And so really to conclude as my final slide, I just wanted to say that with the integration of the new TCFD aligned scenarios into the tool, we really look forward to empowering investors and companies to be able to better identify climate water risks and opportunities also to build resilience. If you have any questions on the tool or you would like some expert support on risk assessment, please do contact us at the water risk filter at wwf.de. And I encourage you to stay tuned for the launch of the enhanced website end of October this year. But you can, of course, get started already now in using the tool. And there are many resources available, which I've listed here, from reports to methodology documentation and tutorials to help you get started. Now, I know that was a lot of information, but please don't hesitate to contact us. And also, now I'd like to hand over and to invite Jens Honerhof from the German Development Bank DG to share with you his experience and insights on the water risk filter and work that he is doing with clients on water stewardship to build resilience. So thank you very much. And Jens, the floor is over to you.
Thank you very much, Ariane, for the introduction into the water risk filter and the insights you were giving into this great tool. My name is Jens Honerhof. I'm working at the German Development Bank DG, which is a private sector branch of KfW Group. I'm working in the sustainability department, and at the sustainability department, we take care of the sustainability aspects of our investments, always with the aim that our investments we take around the world are meeting international environmental and social standards. So next slide, please. Our starting point, to go back like 10 years ago, when we started our journey with WWF in the water topic, is that our starting point was that water was like a risk which was not really highlighted in the past. World Economic Forum, I put in the copy of the report here, is highlighting these risks at least for the last 10 years in the top 5 risks. And it's really one of the worst risks which can be linked to climate change. I think everybody nowadays is very conscious about the risks, the financial risks incurring in this, and also the risk to human life and all the associated disasters which can be linked to this risk. When you think about the last events in Europe regarding the flooding events with a lot of loss of lives, which nobody really expected, that countries which supposedly are prepared for this kind of climate are not prepared in this. So we are not really, we notice nowadays that nobody's really prepared in this. And 10 years back, we noted that this is a big risk to our portfolio, especially to the companies in the world we are financing, which are developing and least developed countries, where the companies don't have the infrastructure often and working environment to be prepared to these extreme weather events and natural disasters. Not even speaking of the climate change issues, just the normal footprint of environment disasters which can occur, can cause losses which nowadays Ariane was mentioning up to 300 billions, which is a value at risk worldwide. If we come to the DG portfolio on the next slide, we can see that DG itself is invested, especially in Latin America, Sub-Saharan Africa, and Asia, with an overall portfolio of 8.5 billion invested. So our aim is, as an investor, to be sure that these investments meet, of course, our standards on the environmental and social matters, but also that they are prepared facing this kind of extraordinary events. And as most of these extraordinary events really come into the water topic, we want to be really ready with the companies. We want to look into it. But how do you really manage this kind of portfolio? I mean, we are a small actor in the development and the financing part. So some of you, 8.5 billion seems to sound big, but if you see if the serious data, 300 billion at risk, and there are trillions of money invested, which are linked, for example, to the serious platform. So you need to focus really on the companies you want to look into the water risk more in detail, because you cannot cover all the companies at the same pace. So if you change the next slide, that was like our starting point for the portfolio in 2011, so exactly 10 years ago, when we worked with the WWF on the portfolio analysis of our company. So we took about 500 locations of companies all around the world, and trying to have a checklist, basically, which of those locations are exposed to higher water risk, and what are mitigation measures we can take with those companies in order to mitigate those water risks. Especially as a development finance institutions, we have these technical assistance projects, funds, which can help people to be better prepared to this kind of risks. So we wanted to have the increase in sustainable development in the companies itself. That is a general aim of us. And I think that is still very valid of also the water risk filter as it is nowadays, and to contribute to better natural resource management also in the region. So the aim is not only at the company itself, but also larger into the watershed, into the region, linking with the local governments and probably also with national governments in order to have enhanced and better management of this very important topic, because we see this is taking not only a risk management perspective, but also it's a big opportunity for companies to be working in these fields. Go to the next slide, please. We can see our basically portfolio analysis, which we perform on a regular basis. That means every company which joins our portfolio will be mapped on this portfolio map, and based on this, we will take them into our portfolio management. That means at least on an annual basis, we will revise these companies with a higher risk, water risk in this management. As Ariane was explaining, the portfolio mapping is on operational risks of the company itself, depending on the water consumption, on the quality they need of the water, etc., and on the discharges they have, and also on the basin risks, which are more related to the location where they're based in. And of course, our focus from the selection of the companies is on the top right of the screen, which you see, and we will focus to have a more thorough analysis of those companies and have also programs running with these companies in order to enhance them and give them more opportunities to be more resilient, but also to discover opportunities in this field. When we come to a particular risk, on which you see on the next slide, which is the flooding risks, which we focused on already for many years, because with the background that most of the financial value gets destroyed with flooding events. That is not only a tendency which is due to climate change, also if you see natural disaster reports from the insurance companies or from the big reinsurance companies, it's always often the flooding risks associated with the natural disasters which cause the largest damages in this. If you think about hurricane season in the Caribbean Sea, of course there are strong winds, but the destructions are not the really loss of value is usually caused with the floodings associated with those extreme weather events. So if we take a look with the water risk filter in the Peruvian coastline area, which is for us a very interesting area, just go back one slide. You can see on the, thank you. You can see on the coastline that for the change of risk for the 2050 scenario, you can see that there are large risks associated with the flooding events in these areas. So usually export production of agricultural goods where we are involved in represent an important part of our Peruvian portfolio. And we want to be with the companies on a long run. So if we can see the risks associated in the long run, we can see that flooding is one of the major risks to be occurred. Of course, there's also the draft situation to be prepared to, but the flood events did cause in the past the most losses and are projected to cause the most losses in the future as well. So we need to take this into account for the individual company. When we come to the next slide, we can see the individual company where this is managed. This is one of the big three agrarian producers and exporters of Peru. They produce asparagus, fresh and canned one. They have blueberries, avocados. So these are a lot of products you will find at a specific season in your shelves in the supermarkets in North America, in Europe, or even in other parts of the world. And we want to be sure that it's a sustainable production. They also purchase fruits and vegetables from smallholder farms. So it's a challenge to have not only the management of the risks associated, and a lot of those are water associated risks within the footprint of the company, which is about 3,000 hectares of production land we have there, but also of the smallholders and suppliers of the companies, because it's a responsibility of the buyer to be sure that products are produced in a sustainable way on the one hand, on the other hand, that the companies supplying are also prepared to take in the risks due to the climate change or the extreme weather conditions. So we did, the company itself implemented several measurements on the water management within the company, starting with the groundwater monitoring of the wells in order to be sure that you don't take the water away from the neighbors, basically, that water levels are sustainable in a way, that water usage is reduced in it. But a very important point is to be prepared for emergency situations, to be able to continue to produce and to act with your neighbors when your emergency situations are occurring, like 4 years ago with the last big El Nino event. The company was well prepared. There was damage to the general irrigation system, and they had sufficient water reservoirs implemented in order to continue their production. You can imagine that blueberries, avocados, and other goods, if you don't have water for 3-4 days, the whole plantation will die, and avocado plantation takes 4 to 5 years until before they start producing. So there's a big risk of losing investment. On the other hand, it also gave the company the opportunity, when this event occurred, that they could continue producing, that they could be present on the market. That means they could deliver their contracts to the market and could achieve that moment higher prices. And at the same time, they had the technical capacity to help the surrounding communities to cope better with the situation. That means practically delivering fresh water to the surrounding communities and also delivering food and giving aid in reconstruction of the infrastructure which was destroyed at that point. So these are responsibilities we can see of the companies which on the one hand prepares themselves for these extreme weather events, but also gives opportunity on the market and also helps the surrounding communities in order to cope better with this. So it's enhancing resilience, but also it's a big business opportunity. We come to the next slide. We try to support this in a more structural way together with the Edeka, which is the largest retailer in Germany, and with FMO, which is the Dutch Development Bank, supporting the implementation of sustainable water management through the Alliance of Water Stewardship for the Latin American region. So this is an effort that all companies can join and get support from this initiative, not only our client companies, in order to enhance this sector. And also with the next slide, we try to promote this kind of initiatives within the financial sector. So together with the WWF, or the WWF organized in 2019, big event for financial companies in order to identify better this risk and to develop opportunities and document this kind of knowledge and make it available especially to the commercial banking sector, because as said, our portfolio in comparison to general investment portfolio in this world, it's very small, but it gives a big opportunity for companies to learn from this and also to be better prepared in their portfolio to identify this kind of opportunity. So this is my part in it. I've come to the last slide. So if you have any questions, we can happy to come to this and respond in the Q&A section at the end. Thank you very much, Ariane, and I stay on tuned here.
Thank you. Excellent. Thank you, Jens, for this excellent presentation. So you have heard from Jens from DG, who has explained to you with regards to how they've been using the water risk filter tool, their initial development in collaboration with regards to our work with WWF in the development of the tool. And now I'm very happy to invite Zinle Shabalala to present with regards to who comes from the CDC group and with whom we have a new partnership on the application of the water risk filter and enhancement of the tool. And so Zinle, I'd like to invite you to take the floor and to take over the presentation with regards to the great work you're doing with us.
Thanks, Ariane. Good morning to some of our colleagues I know in North and South America, and afternoon if you are in the UK, Africa, and India. So yes, I'm Zinhle Shabalala, an associate in the ESGI team within CDC. For those who are not aware or familiar with CDC, we are UK's developmental finance institution. We focus mostly on less developed markets and sectors that are most important for economic growth. Our key and primary markets are Africa and South Asia. And so yes, based on also our very key markets, we are already noticing quite an increase in the number of risks, especially as they pertain to food security, which is linked to warming, droughts, floods, and changes in rainfall. As CDC, we also acknowledge the need for urgent action in reducing greenhouse gas emissions. So I'll just direct us quickly to the next slide before I continue with our introduction. I'll just take you over our climate change strategy, the partnership we have now with WWF, and the exciting work we've started doing with them and understanding our portfolio risk and exposure to water risks. And towards the end, we'll probably just talk to the next steps for our partnership as well as interaction with our portfolio companies, and we'll take questions. So on the strategy perspective from CDC, we have key pillars that are anchored across the TCFD principles. And most of us are quite familiar with these. And for the purpose of today's presentation, I'll just focus us on the pillar that is number 3 on risk management. So we do acknowledge the importance of reducing greenhouse gas emissions, but there's also an increasing focus and the need for capital allocation towards building resilience, especially within our most vulnerable markets, which are mostly in sub-Saharan Africa and South Asia. Our strategy is anchored across the 4 pillars of the TCFD. And under the strategy, we also have key building blocks, which is on the next slide. So our building blocks, which feed into the strategy, are also tied to the Paris Agreement. And within these building blocks, we have 3 key principles, which is driving our portfolio and investees towards net zero by 2050. The second building block is on just transition. And the work that we're doing with WWF is under our 3rd building block, which is building resilience and adaptation within our portfolio companies as well as our markets. So key to this 3rd building block is not only helping our investees understand their physical water risks, but we're also helping them understand opportunities that could arise from early identification of risks. So I'll take us to the next slide. In terms of our partnership with WWF, it is new, it is exciting for most of us. And as CDC, we are known for being a key player in the private equity space across Africa and Asia. And we've been over the years been known for building capacity within our fund managers, as well as supporting our underlying investees with various tools, guidance notes, and training. So we see this partnership with WWF as one of the many ways we can help build capacity within our markets and also build resilience. So with this partnership, we are supported by CDC Plus, which is financed by the UK aid from the British people. And we are looking to support Ariane and the team in enhancing the tool from not only understanding current water risks, but helping you also understand future risks based on the TCFD scenarios. And the tool is broken down across different pathways to help you understand what your portfolio would look like in future. So under our building block of adaptation and resilience, we are looking at doing it across 2 approaches, which is understanding our portfolio risk as CDC, our exposure, but it's also using that to start engagements with our investees and private equity funds to help them as well enhance our reach in terms of the impact that we'll be having in discussing climate and also helping them identify future investment opportunities to start driving capital towards building more resilient infrastructure, as well as other various forms of capital mobilization towards building more resilience. So our key objective with this partnership, which is really exciting for us, is to build greater awareness, reporting, and action amongst investors and private companies. We often get asked by private equity funds on tools that they could use, an approach that they could use to start thinking around climate. And we find that this tool with WWF is also one of the key tools that have helped us start engagements and conversations around climate change. So key to this partnership is to just help finance resilience and climate adaptation in our markets. And this will be done via mostly our private equity players, which means it extends our reach and it also extends our impact in building more resilience in our fragile markets. So I'll drive us to our next slide. So in terms of the work that we've been doing beyond just the partnership, we have started doing water risk scenarios. So this is an example of how you can apply the tool as an investor yourself, if you're a private equity fund, or if you're a financial institution. I will also highlight that these slides that I'm going to show after this are preliminary findings from some of the work we've done. So it's still high level. We're still waiting for more data to get a sense of our entire portfolio. But based on these preliminary findings, rather, these are some of the key takeaways in terms of understanding what our portfolio currently looks like as CDC. So I'll drive us to the next slide. So this first slide is helping us understand physical water risks as well as projected changes. So the current tool, as Ariane mentioned earlier, does give you your current physical water risks based on your location as well as the operations of the business. But with our partnership with WWF, it's to broaden the scope and also enhance the tool to help you get future projections, which are also centered around the TCFD. And based on the analysis we've done with some of our GPs in India and Africa, we've also been very specific to select key sectors that are most vulnerable to water risks. And as you'll see in the slide, our key observations are that our India portfolio is at risk mostly, with medium to very high physical water risks. And these are mapped out across 3 different pathways, one being the current trend and the other optimistic and if we being pessimistic. So the darker the color, the higher the risk. And the size of the bubble also reflects the amount of change that we are anticipating or projecting in future. I do also want to highlight that even if you are seeing lighter shaded bubbles in the map, it doesn't necessarily mean it will always be the case. So for example, Ghana is a very good example of it's currently projected as medium risks, but we are seeing that gradually change. So the bigger the bubble, as you'll notice, it's slightly bigger than other parts of Africa. So that means the change will be quite drastic. And for that reason, we're going to need to start thinking around what we can do to support investees in that region, as well as how our private equity players can also start thinking around what to put in place and how to tailor their strategies to fit this risk profile. And I will direct us to the next slide. So in terms of understanding our risks, what the water risk filter does is gives you a more holistic approach to understanding your portfolio's risk. So physical risks are beyond just one aspect. The tool itself breaks down your understanding of risk across 4 key areas. We looked at water scarcity, we looked at flooding, we looked at water quality, as well as ecosystem services within our current portfolio as CDC. So our physical risk is projected on the slide, as you can see. And these pathways are 3 different pathways, and these are all tailored towards or guided by the TCFD scenarios. So we are seeing change of what could happen if we adopt a more optimistic approach to predicting the future, and these changes are by 2030 or 2050. I do also want to highlight the importance of context in this case. So the tool does give you physical risks in understanding what the different aspects are, as shown on the slides, but there are also other forms of risks that inform your overall portfolio risk. So the tool will look at reputational risks, as Ariane mentioned. It will also help you understand how the regulations will be changing in future and how best to position yourself, your portfolio, or your pipeline in making sure that you're well versed for those changes. And then I will direct us to the next slide, please. So deeper in our analysis, we also focused on scarcity. So this slide also draws on water dependency as well. And it's also based on our portfolio's exposure based on either the sector and heavy reliance on water in the region. How much does that site depend on water, and how is the water profile expected to change over a period of years? So the change in risk is very important in this slide, and I think it's also very critical for us as CDC to understand the risk profile of the specific assets in these areas. The bigger the bubble, again, the bigger the projected changes. So we are seeing that climate risks will continue to increase in India, and when adopting a pessimistic approach, we can see that as the bubbles continue to grow bigger, it means the assets that are in that area are most likely to be stressed. So what this also tells us as investors is what should we start thinking about in terms of managing our risks? What types of conversations should we start having with portfolio companies that are based in those areas? And in terms of strategies as well, it helps you understand what are your key focus areas. And also, just to highlight, it does also reflect on your financials as an investor, because when you look at your physical risks, it also reflects to costs in terms of operations, how much is going to be required to get much cleaner water in your operations and in any business. If it's an agricultural or production plant, the impact of high quality water could mean disruption in production or higher operational costs. So this slide itself also just flags the dependency of a specific asset within a specific catchment area. So moving on to the next slide. Okay, so what we then did beyond understanding the physical risks was looking at our financial exposure. So you'll also see on the bottom right of the screen, there is a list of sectors in which we invested in. So we did ask our fund managers to also indicate the assets that they've put in the system on what sectors they are, and we got a sense of their financial exposure. The bigger the bubble, the bigger the financial commitment, the bigger the amount of money that's at risk relative to the size of that specific fund manager. And based on this, the energy sector seems to be the one at most risk for us. This is pinned against the physical water risks as well as water dependency of that site. What is very important, I guess, and key that the water risk filter does is it shows you the dependency of a site currently at present, and then it also projects, giving you 3 different scenarios of how the situation is likely to change. And based on the sector, you will also notice as well in this graph is that if you're in a sector that's heavily dependent on water, like hydro and any other energy production, your asset is likely to be at most risks. And we are seeing professional services, for example, having very low risk from a physical water risk perspective, as well as water dependency. So what is also key for us here is understanding how much capital is at risk based on water. And I think this is also very important for us as an institutional investor when you start engaging with our private equity funds in terms of best practice, in terms of climate change, and having them to start thinking around integrating climate into their ESG practices, as well as during the due diligence phase. These are some of the things they can start thinking around, and in terms of allocating capital to more resilient infrastructure or more resilient design to future-proof the assets. And then I will take us to the next slide. So key messages from what we've seen. I think we all appreciate the need for the private sector to play in terms of building resilience. We can't leave it all to DFIs. And we find that this tool itself is a very great way for us to start engaging with private equity players, as well as our direct investments, where we can help them understand their risk, but also open a platform where we can start engaging on climate. The tool has also shown that context really does matter. So the drivers of change will vary across different geographies, and these are based on physical, regulatory, and reputational risks. This is very important, especially for DFIs, because we invest in more fragile states where things change quite rapidly, especially also in terms of conflict within some of our markets. There is a need for us to understand location and operational level data for you to understand your exposure as well as your financial risks. The water risk filter itself is a very powerful tool. We find that it's a lot easier as well for private equity players to use and understand, but most importantly, it shows us as investors where we need to start directing our efforts in order to mitigate and adapt to water risks in the face of climate change. So next steps for us and CDC is to continue engaging more with our private equity investors and start engaging on future risks and helping them build strategies to future-proof their profiles in future. But it's also great. I think we've spoken at length about the risks. This tool is also helping us identify future investment opportunities for water infrastructure. So we are seeing a growing need for more capital for private players to start investing, but we're also seeing opportunities for us to invest in water infrastructure as an institution. And it's also helping us starting to engage with companies to consider designing more resilient infrastructure when considering or planning for new projects. And last but not least, it's also helping us identify and introduce climate smart agricultural practices and nature-based solutions. And yes, thank you. I will end it here. We have a special email address for any water-related issues or questions that you might have. So feel free to use the email address if you have any questions for us. Thank you.
Wonderful. Thank you so much, Zinle, for this excellent presentation. I would like to take this opportunity now, after all the great speakers, to open the floor with regards to a Q&A session. I've been checking some of the questions that you have been popping in the chat. There are quite a few questions. I don't think we will necessarily have the time to go over them, all of them, but don't worry, we'll be able to follow up with you also to address all your questions. So with regards to our first question though, I wanted to direct this one to it's the first question that came in the chat. How does the Waters tool consider groundwater? I will invite Rafael Camargo, who is the Water Risk Filter technical manager, to quickly address this question, which one of our participants has raised.
Thank you, Ariane, and thank you, Colin, for that's very relevant question. How much does the water risk filter consider groundwater? Yeah, groundwater is not considered specific as one single indicator, but is integrated in all the water scarcity models. And we use a number of indicators for the current risk as well on the projected changes. So always when on the models are built, they integrate groundwater there, because of course that's very important to consider.
Thank you, Rafael, for your comments and response. The next question that I have here from one of our participants asks about how do you convince in practice these companies to invest in such water management intervention, CBA? In other words, do you put a monetary value to the water risk and convince them that water investments will cost less in the long run? Now, this is a great question, which actually I will direct to first Alexis, if you want to have a go at providing a response, given your role in the development of actually one of the new valuation tools that will be embedded in the water risk filter within that context. Alexis.
Yeah, I mean, I think when it comes to different actors, it's going to vary depending upon the nature of their business. Some ultimately, respond to present costs, whereas others might be thinking about future proofing. I mean, you heard from Jens about, various approaches ranging from mitigation of flood and scarcity kind of issues in Peru, ranging to some of the elements that Zinle Prana was speaking about in terms of exposure and dependencies on water and whether that's manifesting as the need for clean water. And so those companies will have a sense of where their cost structures come from. And so whether the engagement there is because of, its increase or it's, a risk to capital costs or a risk to operational costs, it's going to vary. And so I think the key there is that you're making those explicit linkages between how risk is affecting various forms of the financial statements. And to the point that Jens has raised already, back in 2019, we did a fairly extensive kind of walkthrough of how those links kind of come together, how those kind of tie. And I think, walking companies through that to understand what is the link between water risk and financial impact is quite critical in that. And so there, I think, is really at the heart of it. When you get into issues of a little bit broader in terms of, how you kind of go into bigger investments that are not necessarily tied to directly the facility, but more collective action pieces, there's sort of other approaches there that can be mobilized, but I probably will hold it at that point, just in the interest of all the questions that are sitting around.
Thank you, Alexis. Yes, and I guess the next question, which I'll direct more to Jens and Zinle, which is, as investors, What is your role concretely with your investees regarding adaptation to climate risk? Do you provide them awareness only, expertise to adapt their business? Who funds the adaptation? And is it grant or debt? Um, with this, the same person also asked, how do you circulate knowledge and best practices amongst your investees? How do you convince them to prioritize the climate risk versus many other business priorities?
I can go at it first. So we work a lot with private equity funds, and these are very important questions. And often we do get asked the same questions when we start engaging on climate with deal makers and transactors. So when you start mentioning water risks, they often think it's not going to happen within the life of their investment, or it's not going to happen in the immediate future. But what we normally do as CDC, or what we started doing, is engaging our clients rather in terms of ESG and climate change. So we've started integrating tools within the current investment processes. So for example, tools such as the WWF tool, they can use it for screening. So for example, when they do the initial assessment of a transaction and understanding the overall risk profile, such tools help them understand and contextualize risks in future. And you often find that in terms of materiality, as Alex mentioned, if the site or that investment is heavily dependent on water, if it's a hydro project, for example, as we've seen, I think once you start showing such future projections and such vulnerabilities of an asset, those who are making the investment decisions are more informed in terms of their overall risk profile. So that's one way. Another way that we support our investors is not only through tools and guidance, but we have CDC Plus and technical assistance, where we provide grant funding in terms of any, for example, if you've identified any opportunity to collaborate with a company or help them build resilience, there is capital allocated towards supporting our investees. Conscious of time, so I'll let Jens also answer.
Yeah, thank you, Jenny. Thank you for the question. It's always the same approach also with the DEG and the climate mitigation. Of course, we have a climate policy that aims that companies we are investing in also aim for zero net CO2 greenhouse gas emissions in the future, and that we are excluding sectors to be financed for the greenhouse gas emissions. When it comes to water, it's more climate adaptation strategy we are running, and which we try to explain through it, that we're working with the water risk filter in order to identify the risk, as Jenny was saying, and show this risk to our investment managers, to the companies itself, and ask the relevant questions. How are you prepared facing this kind of situations coming up in 20 years, in 50 years? Because we believe in sustainable development in the long run. And how does the company keeps the license to operate with the communities and with the government agencies, with the other companies surrounding them, and find the opportunities in this, especially in the agricultural sector. There's a lot of opportunity. Buyers nowadays, and they're asking about the sustainability of the product. So you can, if you're a front runner and you can prove that you are producing in a sustainable way, you may be the one selling to the retailer at another price in Europe or in the United States, because you have a proof that you're sustainably produced and that you're respecting environmental and social matters in this topic, and that you are placed in the market in these days. And I think you have always to see these two sides. On the one hand, it's risk management for banks. On the other hand, we try to promote these opportunities with companies, and we promote these the same way as JNA and CDC is. They are doing it's with technical assistance program with grants. We are supporting the companies running projects and programs which not only have a benefit for the company, but also for the communities and for the country itself.
Thank you. Excellent. Thank you, everyone. I would just like to finalize and close the session by giving over the floor to Alexis Morgan for final remarks. Thank you, everyone, and Alexis.
All right, wonderful. So a big thank you to our panelists and to all of you for attending today. I think we heard some really great remarks, not only highlighting some of the, I think, the growing importance of asset level information for FIs to really be able to explore this, given the importance of context and the unique circumstances that face each of the different investments that are out there. Everybody is going to be affected by not only water risk, but increasingly these various changes that we're seeing from the climate side of things. And I think it's great to end on a couple of the points that people were making around the fact that we're dealing with not only risk identification and risk identification, but through that, this opportunity identification for not only investment in traditional kind of gray infrastructure sort of projects, but also nature-based solutions, which we're going to see as a really critical part to tackling these different climate resilience pieces that we're going to need to be building going forward. So yeah, some things out of this. I'm sorry we couldn't get to all the questions, but as Ariane said, we'll seek to follow up with those of you who are on here, and certainly feel free to reach out to any of us that we're presenting today, and we can follow up. So with that, thank you everybody, and I hope everybody has a wonderful day.
Thank you, everyone. And thank you to all our speakers. And I wish you all a wonderful day. And we'll follow up on the remaining questions that we haven't had time to address. Thank you for your attention. And have a great day.
Thank you very much. Have a good day. Bye-bye.
Bye-bye.